Are you confused how to select a stock, where to invest and where to not? Warren Buffett once said that all there is to investing is picking good stocks at good time and staying with them as long as they remain good companies. So today in this video, I'm going to show you few important parameters you must look at while selecting stocks for long-term investing. The first one is product and service relevance. You need to first start by understanding the company, that is, knowing what product and services the company is offering. Will their products and services be relevant 10 years from today? For long-term investing, it is very important to look for companies with a long life. Such companies have huge growth potential and the power of compounding applies to such companies. For example, do you think people will be using toothpaste 10 years from now? Do you think people 10 years from now will use pen drives or electric vehicles? Your next step is to check company's financial health. Does the company have good fundamentals? Is the company financially healthy? One of the best ways or the best formula you can use to check company's health is by doing a SWOT analysis. It stands for services, weaknesses, opportunities and threats for the company. Strengths are generally what the company is particularly excellent at, or the things that sets their businesses, services and products apart from their competitors. Weaknesses are where a company is at a competitive disadvantage relative to their peers. Where is the company falling short? What are the things that the company lacks at which their competitors are excellent at? Opportunities highlight the potential growth or improvement areas for a business. What new things can a company look at to expand their presence? And lastly, threats are risks outside the company's control, like potential change in law or a new competitor. For example, for Colgate, brand recall and visibility has become their biggest threats. People don't ask for toothpaste anymore but for Colgate. It has almost become synonyms, whereas market saturation, high operating costs are its weaknesses. Tapping into rural markets, strengthening their business and expanding product lines might be their opportunities to expand themselves, while unfavorable economy, raw material prices, their threats. Another important factor to look at is debt and promoters holding. Would you want to give your money to someone who is already under a huge debt? No, right? Same goes with companies which you want to invest in. Before you invest in a company, always check how much debt the company owes to others. But remember, debt doesn't necessarily mean that the company is not good to invest in. The same goes with promoters pledging. How much has the promoter pledged and how much do they hold? A low or a declining promoters holding may imply that promoters themselves don't have faith in the growth of their own company. Whereas, if promoters themselves are invested in their own company, then they are more likely to take unbiased business decision and will allocate capital keeping longer objective in mind. Lastly, always see if the company has an economic moat. The concept of moat was popularized by Warren Buffett. Imagine this. A moat is a deep, wide ditch surrounding a castle filled with water and intended as a defense against attack. Some stocks have similar moat around them. It refers to a company's ability to maintain competitive advantage over its competitors. For example, Maggi, that is Nestle. It has become such a common name in Indian household that Maggi is considered as a synonym to noodles. So the bottom line is that by keeping these important points in mind, you will be able to pick stocks for long-term investing. Now, why don't you tell us in the comment section below if you use any of these methods before you invest in a company? Tell us in the comment section below. I hope you found this video helpful, and for more such interesting content, don't forget to hit the subscribe button. Thank you and stay tuned.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.